Hi, it's Mark here. It is Tuesday, October the 28th, 8 p.m. Eastern, going on midnight GMT. US session done. We're into the new trading day, the 29th of October, Asian session underway, and a relevant time to do an analysis on gold, see where we are, how we got here, and possibly where we are going forward. Right now, sitting at 3,952. I'm going back to the beginning of 2025 when gold was 2,600. Record high last week, 4,380. That's over 50% increase in the price of gold. And half of that over the past 2 months, August through October, where from 3,300 up to this record high level. And all through this rally, it hasn't been a case of if it'll stop or turn around. We know that. More a case of when it'll happen. $4,000 was deemed to be a level that buyers wouldn't be able to break through or wouldn't be able to maintain. That wasn't the case. Buyers broke through that 4,000 level, raced up to set this record high. On the 21st of October is the day that sellers really stepped in, and we saw a huge sell-off on that day. $300 from a high of 4,380 right down to 4,080, and then leveled off for a day or two. Another 2 days of selling, another 200, $500 in total. Gold was sold off in just over a week. Tomorrow, um, it's actually tomorrow, the 29th of October, Fed interest rate announcement. Pretty much a done deal. I think that rates will be cut by 25 basis points. That's bearish for gold, and I think that has been priced in, and that's what contributed to gold's sell-off over here. And then on Thursday is President Trump and Xi meeting to cover the trade wars, reached some kind of a settlement. So far, a positive tone, and that has also contributed to gold's sell-off. So it's always the fundamentals that create the trend and the move. In the rally, gold strengthening was weak US dollar. We saw weak US dollar pretty much the whole of 2025. Central banks buying in, not just the US, it was a global phenomenon. All the central banks buying in uh, and buying gold. That contributed geopolitical risk, Middle East, supply concerns, the Ukraine and Russia conflict, all contributing to the demand and this rally we saw in gold. And then we got the downturn and the sell-off. Like I say, the potential for a settlement with China and the US has contributed, rate cuts contributing, and of course, profit taking. All of the buyers at some point were going to take profit, and as soon as the warnings came, they never really materialized until now. And then sellers jumped on board. Profit taking has continued through from the initial, the 21st, and the last 2 days, all down to this support level. But buyers have stepped in. Buyers of gold stepped in today. We'll see whether that can be maintained. Will buyers get above this 4,000 level? Buyers will look to get above this ascending trend line, or will sellers continue uh, with what we've seen since the sell-off from the 21st of October and come back down and retest this support level? I've also drawn in a fib retracement tool measuring this recent rally, and the fib retracement levels show us where the reversal will get held up or will struggle to pass, meaning how strong is this reversal? The first fib retracement level, the 38.2%, that was at 3,978. Sellers broke through that. The second, and in my opinion, most significant fib retracement level is the 50%. That's at 3,843. Hasn't yet been reached, didn't get there today. Buyers stepped in before that could happen. if selling does continue, I do believe it'll be a hurdle for sellers to get to test and to try and break at this 50% retracement level. There's some of the elements that I've just covered. The gold has rallied 50% in this year, 25% in the last 2 months. Started this week under pressure below 4,000, hasn't as yet been able to break above that level. Part of the bearish tone we're seeing in gold is the positive preliminary news with China and the US, the upcoming trade talks. Profit taking is added to the bearish tone. The rate cuts add to a bearish tone. And then there's the technicals as well. And the technicals are the first thing that gave us or give us the a warning of what's to come. Here on the daily, a triple top. A triple top is a very strong reversal sign. It did play out. EMA's crossed and it has followed through. And if I go to a longer time frame, to a weekly, there you'll see we had a double top candlestick formation. Strong reversal sign has played out this week and come down as well. So the fundamentals and the technicals all have contributed to where we see gold sitting right now. Going into tomorrow and Thursday's events, buyers will be looking to break above this 4,000 level, looking to break above this ascending trend line. Sellers will be looking to maintain below this 4,000 level and to come and retest support and that 50% fib retracement level. For bullish gold, central banks buy in, weak US dollar and low yields and geopolitical risks contribute. Bearish gold, rising yields and a strong US dollar and diminished safe haven. A lot of information, but I think it's relevant. It's where we're sitting right now as technical traders. Yes, we can anticipate what will happen. We can see what brought about these moves technically and fundamentally. Now we can watch technically and watch for the moves, shorter time frames if need be, and act on what we see. Good trading. Keep that discipline.